So today I just want to, you know, go over the weeks and, basically the last 30 days of price action, right? And for the entirety of that time, right, we have been, on point in regards to the dollar, euro, GBP, USD, and we've been doing fine, within the index futures markets. So firstly, let's look back at the you know major time points, or the moments when liquidity was injected into the market, right? So that was Wednesday, right, where we had 4 high impact news event folders, right? On Thursdays we had the most, which is why we expected Thursday to give us the most volatility, right? On Friday, as you guys can see, we just had one, USD high impact news event. Looking at the the trend that has been underway for the past, I would say, the past 30 days, right? The reason why we had this downtrend like this, and whenever we had a bullish sequential SMT, it didn't hold. Why was that? This was due to the fact that the higher time frame sequence, right, the higher time frame cycle was bearish for the foreign currencies, and by that I mean Euro and GBP USD. If you guys can remember, right, we have sequential SMT between the we had sequential SMT between the previous quarter, last quarter. So Q4 of 2023, this is the high right here. We're looking at the pound, right? This was the high. This was, okay, that was the high. That was a mistake, but it's close, right? So this was the high right here, right, of December, the high of last year's fourth quarter, right? During the first quarter of the current year, right, we had this candle trade above this high, right? Whereas the euro, right, couldn't even get above these highs, much less this one, right? So this was sequential SMT, and not the highest order, but these types of sequential SMT, within this quarter, it usually just continues until we have a sequential SMT which is either greater than this or equal. So right here, right, when we saw price barely trade above this high and pull back, right, then just expanded higher. Why was that? But due to the fact that we had this down here, right, and this right here is what you would like to actually see, right? We had price close above here, above the high, and above the close, right? Also, you can see that this wick right here is, you can see that it is greater than this wick right here, which is something to note, right? So we had a close above here, then we had the wick greater. We're looking at this specific time frame, the daily time frame, right, for this specific cycle. Price broke down. There was already sequential SMT and a precision swing point right here, right? And we're just focusing on the euro. No, we're just focusing on the euro and the pound, right? Precision swing point here, and I'll turn the cursor on so you can see, right, on this candle at this specific time. right? If I move the cursor over here, you can see that these highs, right? This high, specifically this high right here for the pound, and I'll draw it out in time. I'll change the color to red, right? So this high right here, and I'll do it for the dollar as well, right? We had, around about this high, but here we didn't even do that here, right? And this is important. And why is this important? This is due to the fact that these highs were not symmetrical, right? Meaning that this was actually, SMT, which caused price to fall. So SMT occurred here, right? For the dollar, we didn't even get to, these lows either, right? And we didn't have to. And why is that? Right? We took out, these highs, and then we had, sequential SMT between yearly quarters, right? So price closed above both of these highs right here, right? Which caused, what would I say? A type of sequential SMT which, allows price to be heavy, right? So it's not like it's double sequential SMT or, anything like that, right? That would just be stage 1, stage 2, as you guys already know. But here, right, we had sequential SMT occurring, or we had sequential SMT here, and below the sequential SMT, the high which caused that, we had, regular SMT, right? So right here, this high, right, price trading above this high was SMT. Price trading above this high was sequential SMT, right? Again, this high, price failed to go above it, and in regards to the dollar, we failed to go below this low, right? So again, let me try to make it a little bit easier to understand or see, right? And this is important. So now you should be able to see it, better. And I'll just, right? And, these types of things are, it's better to see this on the within the higher time frame cycles, right? So like the quadrennial cycle, the, the yearly cycle, monthly cycle, and so on. And, this is usually followed or, by, consolidation. So consolidation happens first, right? Which, allows price to, get ready to actually expand. So throughout all of this, right, the euro, falling here. Even when this high was formed right here, right, you can see my mouse, whatever this is, whatever they call it, right? This high right here, then you have this high right here, right? You can see the distance between here and here. Right here, you can see that the distance is, how would I say, is much less than this distance, right? So throughout all of this, choppy price action, right? Price was literally getting ready to, manipulate and distribute to the downside. This, right, is the, the Magneto effect as well, which which we were looking for. And this was, this was actually so perfect, right? And we will see things like this happen, over and over. We'll see it whenever we start focusing on commodities, right? We'll see it within stocks. Mostly, you will see it within the Forex market. You will see it within the index futures market, which you have already seen before. You will see it in, the cryptocurrency market as well. But just look at, the distance between these highs, right? So we had this high here, price traded above both of them. We had SMT first, and then after SMT, sequential SMT, right? A precision swing point occurred right here on this candle. Right on this candle, there was a precision swing point, right? Once, right, you have this happen, and then a candle close below the, the precision swing point, right? That actually becomes, a high probability order block. Like this is actually what you would call an order block. And this is a master class in order blocks, right? And this is just one of the few, that there is, right? So, and this one is, it's not rare, but, within the, higher time frame cycles, it is rare due to the fact that, it takes more time for these types of things to happen, to form. So once this happened, we already had SMT, right? And after the SMT, right, you wouldn't short right here. Why? Because this wasn't sequential. So on this candle right here, you wouldn't want to be shorting, right? You would just be waiting for price to trade above here. Once there's a precision swing point, right? Price falls, right? You can, you could get in either here. We did get in here, or I did. And a lot of you guys caught, one of the down move, but I'm pretty sure that some of you got shaken out, and that's fine. Wait, and we'll talk about what happened here as well, right? So we had price trade above here, right? First is SMT. Okay, it's SMT. What do you do now? Nothing. The only time you even pay attention to this is if there is, sequential SMT happens above, right? This SMT, if you are, in bearish market conditions, right? And only if you're in a premium market will you, do this. What is a premium market, right? We have premium and we have discount, and this is very important, right? Premium and discount, right? It is very, what would I say, flexible with it, in regards to the triad, right? Looking when you're comparing markets, right? So you will have one, and this is usually the best case scenario, right? There are times when you will have one that will be in extreme premium, right? Extreme premium. The other won't be so much, right? And below price action, right? For the low, which caused the retracement to go back into premium, the extreme low, right? And you should, looking back in the first quarter, you're focusing within to find that low, which that low will be here for the euro, right? So this would be the extreme low for the euro, but this was the extreme low for the pound, right? So the extreme lows right here, right? I use this dotted gray line, and I'll use a red one for the low that got ran out, or the low which caused the failure swing. Here. So here, right, we had price rally from here. Here, this is the failure swing, right? We had price rally from the failure swing. You would, grade your premium and discount from this low to this high. And the only time, that you would, be focused on, doing this is if there is sequential SMT, a swing high was formed, which is, you already know what a swing high is, right? So due to the fact that we had, a failure swing here, right? This is important. A failure swing here, or you could use this one, but obviously, right? If you have a failure swing, and then above that, right, you have you have sequential SMT in one of the highest orders within the yearly cycle, right? Price will usually be gravitated back to these lows. As I said, I could pull up multiple clips of me talking about this. It's not like we were you already know, right? We've done this so many times. You already know. It's not hindsight. you know Literally, a lot of you guys, sold here due to the fact that we were aiming for these lows, and you probably got messed up here because you were like, oh, it's going to go up, but no, it didn't, and it wasn't. Why? This is because we had sequential SMT of one of the highest orders underway, right? This determines the order flow, if you will, right? And let's go back here, right? Just take a step back, right? We were talking about premium discount, but now we're just going to go back here so you actually get this, right? We have, highs stacked below the utmost high, which caused the sequential SMT, which caused price to decide that, okay, I want to turn around, which caused this candle right here to actually become what, you would call an order block, or if you will, right? We had SMT below that. The only time you look at SMT like this is, when you have sequential SMT occur after trading above this high. So here, when you had this candle close here and then you had the euro close here, the reason why I was bearish was because of this, right? You had everyone else, saying that, oh, we're going to go for this high. No. Why? Liquidity was already induced, right? A premium and a discount market was created when this candle closed, right? So when this candle closed here, the market said, okay, this is not a premium market. That's what happened, right? It's not that this candle needed to go here. No, what happened was there had to be a cracking correlation, right? The market, needed its gears to be changed, which happened. The dollar, right? We traded, close to here, but we didn't go there. This was SMT. And due to the fact that, the only reason why this was SMT and this was considered sequential SMT, why? Is due to the fact that we had everything, here happening within the British pound. And this is why whenever you see one of the the members of the triad that you're focusing on consolidating, you need to focus there. Why? Because that asset will determine the future order flow of price. It will determine the correct premium and discount market, right? So you would have people right here, right? They would be like, from this high right here, now we're looking at the euro, right? From this high right here, this low, that's premium and discount. No. That's not it, right? Everything before here, became irrelevant when the British pound closed above these two highs. Right? Everything before here, like this right here, this high right here, this fair value gap right here, right? No. Gears shifted, right? Once, this precision swing point closed here, then this became a premium market instantaneously. And it's all due to the fact that the British pound closed above these two highs. More specifically, this high, which is a time base high, this is sequential SMT. This is a higher order of sequential SMT due to the fact that we had, SMT occurring before, which when this happened, like price really here, people that, have studied SMT would, try to short here, but they'll get taken out here because this is where the actual liquidity is. Right? Here, right, we had bullish SMT here, but, right, and you need to remember this, right? Remember the Magneto effect, right? If we have SMT here, more times than not, the first time, right, you have SMT, right? Every SMT, there's liquidity above those highs are below those lows, right? So we had bullish SMT here, right? This was actually a good trade. You'd aim for these highs, right? But once price got here, these lows became, food for the algorithm, right? Once price closed above this high, then it's like, okay, it's time to shift gears. And this came from, obviously what I've said before. For, SMT to actually, reverse, you need, for the current cycle you have to be canceled, the order flow to change. This is what you need. You need, for example, this was yearly sequential SMT. We went up, then this was yearly again, right? If this was weekly, it wouldn't work. It would just, continue going higher. But due to the fact that it's yearly, and if it was like, a congenital sequential SMT, then it would fall. But it has fallen, and this is why it has, and this is why it has been falling. Right? And this is why we've been aiming for these lows. Since price was here, we wanted these lows. And these types of moves happen a few times per year. But this is what you really want to be using to get in, in the flow of price action. So you don't make mistakes of, holding buys too long, which you can, but you would just be going against the trend. Because this is the trend. This is what caused the trend. This is the reason for the trend. This bullish SMT down here did not matter once this happened. This got canceled immediately. A new premium and discount was created. Just as how when the Great British Pound had a failure swing here and there was, bullish SMT, price, went to, this high, and this became the range of premium and discount. This became the low. So whenever we had, a failure swing again here and there was SMT again, obviously price expanded because this was actual discount, just as how this is actual premium. Right? This is it. We had price, you know, for right here, we had price fail to trade, below this low. And here we had price trade above this high. I would not view this as, sequential SMT. Why? It's too shallow. This is nothing. This is not sequential SMT. It's too shallow. You need price to, act close above it, like literally like this, and you need a beefy candle. And it's better when you have the 50% of the body of the candle, at least above the high. Here you can see that this candle right here, this up close candle, the 50% was below. Then we had sequential SMT occur here as well as price fell. So this caused price to, fall, reverse, right? But there was sequential SMT here between these lows, right? The closure of these lows, which we will be looking at. This was not, but this was, it was bullish. This did not fail. It did not fail. You could trade this. You could trade this and get out here. During the start of this week, I did say that, like, look out for this high and this low. If price trades above this high, it is lower, right? If price trades below this high, this low, like, going into the week, then what will happen? It would just, it will gravitate to this high. Then it will go lower again. Do you understand? And what makes it even, more is that, we had SMT below the sequential SMT. Right? This was a literal, a sign that the euro is bearish, is weak, and the dollar is strong. Due to the fact that this low didn't get taken out and this low didn't get taken out, but the pound managed to take off both of these highs. If you guys realize, I did not care about, the cracking correlation here that much because we already had our trend established, right? This candle right here was a precision swing point, right? This was not. This was not a precision swing point. This was. Was this one? No. This down here was not greater than this, which is why we had price, continue lower. You understand? So when looking at, the three trends or, whichever one you're drawn to, you want to see price action like this, right? Like this, not barely, trading above the highs and no. Well, this could be a trade, of course. Of course, that could be a trade. You could, bought the euro right here and, got out here. This is actually this would actually have been a good move. But the real move was the downside, and now we look at the forward time frame, right, where we had sequential SMT occur this week. So there's a number of cracking correlations happening here. So here at this, and make it easier, I'm gonna turn the wicks off. Turn the wicks off here. Turn the wicks off here. That way you can actually see the price action, right? So here you can see that, right? We close above, this. Okay, it was the monthly corners. Okay. So last week's, right, this was last week's low, or the lowest close of last week. During the current week, we closed above it, right? So we closed above it. We did, if you look at the wicks, we wicked below it, but it's the closures that matter, as I always say, right? The closures matter more than the wicks. So we had sequential SMT here, which, hidden sequential SMT, if you will. And all of this occurred, right before, we had CPI. And if you guys remember what I said, what I've been saying about CPI, how can you know the direction of CPI? Is it possible? Michael said that it's random. And I've heard him say if randomness exists in the market, is during CPI. That is a lie. Because this concept constantly shows you the direction, where CPI will more than likely go in. And it's not like 50-50. It's way more than that. Way more than that. Right? So this is why, one of the main reasons why before CPI, right, you should at least, the day before CPI, you need to wait, right? And maybe 15 minutes before you can plan to do something. Because again, let me turn the wicks on now, since you already understand that we're focused on the closures. That we're focused on the closures. Need some time to turn the wicks on. So here you can see, right here, we did wick below here, but this was just manipulation, right? This is to tick people off, right? But here you can see that this close was not lower than this one. Do you understand? And then what happened? CPI release, gone, never to return. Right? The day before CPI, right? If we already have this established sequential SMT, you would expect price to go in the direction of sequential SMT, right? In regards to the monthly cycle. Do you understand? Also, we had sequential SMT on the weekly cycle. If you guys can remember, last time we spoke, we had no bearish thoughts in mind, and then we still saw price expand, right? We had intermarket sequential SMT between the Forex market triads, the ones that we implement, and the IRT, the interest rate triads, right? I'm pretty sure you guys, remember that. And then, even after we came back, which we did a live stream yesterday, right? We still had price, expand, to the downside. And we were not, bullish at all. Don't really have to, make anything up. This is it. Here, right? You just look at the chart for a while and, try to see something. Do you see anything that stands out? Right, and this is, typical CPI week price action. If you bought here, right, in the NASDAQ, right, you got hold here, that's good. Also, remember what I said about the high and the lows of CPI, right? This specific day, Wednesday, we had CPI, the high and the low, they're important. Here at this low, right here, right here, we had SMT, sequential SMT. price traded up. Then what happened? We had the Nasdaq take out the high. Remember, when you're trading, you enter where you have sequential SMT, you exit where you have sequential SMT, right? So there are two types of ways to enter, and there's two types of ways to exit. You will either enter on, within the range, internal liquidity in discount, or you will, buy below a low, sell above a high, which, the decision must come from this sequential SMT. That's the base of everything. So you can buy failure swings if there's sequential SMT, like here, then expect price, to go higher in that direction. Then we had sequential SMT here, right, at the end of the day, right? It was still, it was still within the day. It doesn't even matter if it's like the last minute before the day closes. Once it's within the day, it's time specific. Remember, this would be deemed as sequential SMT. And this is why we had price, fall back within the range and fall back below these lows. Right now, more precision would be, included as to, why we had this setup right here and here for the Nasdaq. You can see the Dow slows more than anything else, as we spoke about the Dow being weaker than, the Nasdaq and the S&P 500. Here we had, right, a new week opening gap being the current week's new week opening gap. We have price reacting to it, right? So price traded into it. There was sequential SMT, right? While above this high, there was a new week opening gap as well. And there was sequential SMT. So you will have times, right? And this is very high probability. At times whenever this happens, you don't really need to be focusing on the, the higher time frame cycle. You just need, if you're focusing on, for example, the, within the weekly cycle, you see this happen, or the monthly cycle, you see this happen, or the daily cycle, you see this happen, which is literally, and we're looking at the S&P 500 and NASDAQ right now, right? We have the S&P 500 forming a failure swing on a new week opening gap. So it traded in, well, this was trading into a new week opening gap. We had the NASDAQ trading into a new week opening gap while closing above the high. Do you understand? So sequential SMT, sequential SMT, sequential SMT. NASDAQ traded into a new week opening gap. The S&P 500 traded into a new week opening gap as well. And then we had price fall. This is the reason. Plus the sequential SMT. Right? Currently, right, you shouldn't be trying to trade right now or do anything. It's Friday, it's 3:08 p.m. You should, like, literally, if you want to read price, actually wait until next week or just backtest. Like, you shouldn't be looking for precision swing points, SMT, trying to find something right now, digging into the, reading the market, trying to trade right now. No, you shouldn't be doing that at all. You shouldn't be looking for anything. Now it's Friday. The best days to trade are, typically Monday to Thursday. Those are the best days to trade. The best day, in my opinion, be Thursdays. Why? Because Thursdays, are made for reversals, right? And reversal is what manipulation causes reversal, right? But reversals are, peak manipulation, right? That's literally the peak manipulation for the weekly cycle, which more times than not occurs on, Thursdays. So Thursdays are literally the best, right? When everyone is like already bummed out and it's either they're waiting for Friday or they're done losing all of their money for the entire week, right? But if you realize you have sequential SMT, more prominent, more distinct on Thursdays due to the fact that it was made for reversals after all, right? For Mondays, right? When you have Mondays expand, right? When there is no consolidation, right? And this can happen in regard of whether if there is just news event or not, right? Because sequential SMT, right, it causes liquidity to be induced, right? It would be lower probability if there is no news event, but that doesn't mean that price won't move. If there is sequential SMT or intermarket sequential SMT, you will likely have an expansion move, right? That's what usually happens. It's just that whenever that happens, like during Q1, right, which makes it still low probability if there is expansions, is that it won't, more times than not, won't return to gaps. So you have prices expand, expand, expand. It's not like coming back to fill the gaps or it's just going to be choppy on Monday. And that's why Q1 is, one of the least probable times to trade. As you guys, realize, well, well, you didn't realize because you were with me. So, we did pretty good the last quarter, but this quarter, it's going to be better due to the fact that it's not Q1. Right. So I hope that you guys, took something away from today. I don't know how long I've been speaking. How long have I been here? I have no idea. But yeah, I hope that you guys took something from whatever, we were talking about. It's just that I wanted to come and, try to show you guys the things that, actually matter, right? And give you a few tips, a few things to study. Be like, why are you trading right now? You don't need to be trading right now. Like literally, you want the most probable time to trade. What's the most probable day to trade? A Thursday with Hyper New Zealand. Like that's really high probability due to the fact that Q4 was designed for reversals, right? Literally reversals. That's what it's designed for. When isn't it a reversal? When there is no news event and then there is no sequential SMT, then you can expect consolidation or continuation. So yeah, I hope that you guys found something useful from this, and we'll speak again Sunday. Have a wonderful weekend.